What is going on, guys? Let's just wait for a few more people to join. In the meantime, I'll say what's up to the ones that are here. Is it Tori? What's going on, man? Richard, Melanie, Raider fan. What's going on, guys? All right, we'll just wait for a couple more, then we'll jump right in it. Actually, you know what? Let me send out a... You know what? I already did. I'll send it out again. All right. So if you guys already caught it this morning, the CPI came out. I think it came out at 6 or 5:30 Eastern time, so fairly early, showing that the CPI is up to 8.6% year over year. As we said before, you definitely don't want to see this number growing, right? Because we got a CPI of 8.2% last month, but obviously trending the wrong way gives the impression, the very real impression, that the Fed actually does not have the tools so far to fight inflation, which obviously makes the market uncomfortable, right? You could see that the 10-year now pushing its 2.5% up today, one of the biggest up days in a long time, and we're well over the 3.1% mark on the 10-year, right? So we're seeing a rise in bond yields, which also is not good for stocks. And then when you look at what the FOMC watch tool is projecting now, you could see that we are now getting increasing estimates, or at least increasing bets, that the Fed will actually raise by more than 50 basis points come the next meeting, which is actually next week on June 15th. But more importantly, there was some thought that the Fed might actually stall, or at least put a pause in rate hikes come September. However, if you look at September estimates now, it looks like all across the board there are various bets that the Fed will actually continue to raise rates in September. So, obviously a more aggressive Fed is also something that makes the market uncomfortable. So it's all across the board. It's actually not not positive, obviously, at all. I mean, this is the highest inflation we've had since 1981, and that is the decade in which rates actually went all the way up to 20%. The Fed funds rate went all the way up to 20%. Because that's when Paul Volcker just ripped the Band-Aid off and said, no fucks given, inflation is too high for it to be sustainable. And we, fuck the market. Like, we have to do what is at our disposal and do it drastically in order to tamp down inflation. And at the end of the day, it did obviously end up working, but it was very drastic. And I don't think we'll get anywhere near 20% Fed funds rate, especially with the amount of leverage that the government and consumers are under now, which is something that's very different from 1981, is that the credit risk is too high for a Fed funds rate to be that high, right? So, yeah, what's up, you filthy animals? What's going on, man? All right, let's see. Moved out of America, too expensive. A little 2020. Good morning. What's going on, Wild Wings? Ivan, what time does the speech start? What speech? No idea what you're talking about, Ivan. There isn't a speech. What was gonna come out today was this right here, the CPI data. There is no speech today. If you're talking about the Fed, that's next week, the 15th. So go back to bed, wake up on the 15th. Sonar, what's going on? Hemnath, what's going on? Yes, hit that like. I always forget to say that. If you're on here, you might as well just hit it. Agreed. It's already here, low key eating what? It's already here, low key eating breakfast. Oh, you're talking about the recession? Yeah. So I guess we should talk about that. So this obviously does increase the fears of a recession. Now, it's not all due to the fact that prices are rising to, all-time levels, at least levels not seen in 40 years, but also because the Fed is actually the institution that can throw us into a recession. So when you hear the Fed talk about a soft landing, what they're talking about is, trying to use tools at their disposal, like quantitative tightening, lowering of the Fed funds rate, et cetera, in order to bring inflation down. But they want to do so in a way that does not cause a recession. However, it looks that since nothing of what, since March, since they started raising rates in March, nothing that they did is actually, having much effect. So now the Fed will have to act more aggressively, and that means that most likely that soft landing scenario is not going to happen, right? The soft landing scenario is actually going to potentially be a recession. And if you look at what the Fed signals that GDP could be, the Fed said that the GDP could slow to 0.9% for Q2, and this was before the CPI numbers came out. So, this basically is a rounding error. If we come in slightly below this, we could end up, in a negative GDP for the second quarter in a row. GDP readings date. So the next GDP is going to come out July 29th, I believe. So June 29th, there's what's called the third look. So they're going to go ahead and look at Q1 again. They do, for some reason, they do these second and third looks on GDPs that have already been reported. But at the end of July, we'll get Q2 GDP. But you could see here that Q1 GDP was negative. So if we get a second consecutive one, then that throws us into an official recession. Yeah, definitely not. There isn't much to be excited about. However, I was watching this thing from a JP Morgan strategist, Gabriela Santos, and she was basically saying that if you haven't sold your stocks at this point, it is too late to sell. And I agree. I definitely agree with her at this point, because it's like, if the markets are already down, and we should probably check on the markets actually to see what effect this has had. So we're now over 3% down on the triple Qs. You could see this consolidation pattern that I drew before, and I had posted this on the Discord as well as on Twitter, saying that, the NASDAQ has been doing this as of late, this consolidation pattern here, and we've seen it tank shortly thereafter, and then obviously now that the CPI numbers came out, and we see a gap down. But this consolidation, we usually see a pop to the downside as of late. So this right here is like a battle between bears and bulls, and then obviously the bears take over and we push lower. But, the QQQ is now down to 289, and from highs, we are down, let's measure it, and then I'll get to your questions, I promise. So we're down, again, almost 30% down. So, is the market going to see another 30% down? Probably unlikely unless we get some sort of black swan event like we had in 2008. If all of this leads to some sort of huge credit risk, or just a mass number of defaults in mortgages or whatnot. But if you haven't sold your stocks up to this point, I don't think that you have much upside to sell here, right? I mean, you can do things such as buy puts, you can do things such as sell calls against your shares, but actually selling your stock, I don't know that there's much upside if you haven't done any sort of offloading up to this point. Now, what you can do here, obviously, is reshuffling, and that's what I think everyone should think about, is reshuffling to more quality stocks at this point, right? You have a lot of beaten up quality stocks here. And I'm definitely waiting for another entry on something like Amazon, which, as we had stated before, after the split, you were going to get potentially a decline in the same way that Tesla and Apple did. And Amazon already after the split now is down 12.5%. And it could go down all the way to around $100, which would put it at, about minus 20%. So definitely waiting for another entry here. But like I said, use this as an opportunity to rotate as opposed to, just thinking about selling and exiting the market. I think it's a bit late to do that. Shafit, thank you so much for your donation to St. Jude's, man. $23. That's a very specific number. But thank you so much. Selassie, I'm not sure what you're referring to, Pete. Are you a Rastafarian? Blood Clot Day. Give us a good put, Z. Well, I don't know what you own. Plus, the time to buy puts was before today. You would have bought puts in preparation for today, right? Like right now, especially with the VIX being elevated, options prices are higher. Quick question: do you have only investments in stocks or have other assets like real estate? I'm not a huge real estate investor. There are reasons for that, but yeah, I mean, I would say most of my investments are in equities. Doesn't mean real estate is bad. All right. Thank you for your time. Appreciate your input. Thank you, Joel. Driving and listening. Thank you. Doc H. Oh, are you driving through the desert? You're in Dubai, right? Thanks for your insight on the market. Your Discord is the best. Thank you, Dave. Greg, are you doing any buying for the long term at this point? No. I don't think. I mean, as I stated in the video before last, I said I think you can afford to wait in June. Couple of reasons. One, June historically is a terrible month during midterm elections. June is usually the worst month during a midterm election year. But obviously, June also being the month where the CPI, as we had stated before this, where there was a real possibility the CPI would come in actually higher, meaning that it's not trending down. Now it's bouncing back up and actually going higher. And who knows? I mean, July CPI can be even worse if the tools that the Fed is deploying aren't working. So you have that. You have obviously the Fed now is going to be raising rates on June 15th, right? What if the Fed comes out and says, you know what? All right, fuck it. We have to rip the Band-Aid off. We're not doing 50 basis points. We're going to do 75 basis points. If the Fed does that, then I think the market tanks even more. I think they have to do that, but I think the market will tank even more. If the 10-year starts getting up, above this 3.2 number, and we start creeping up into the 3.5s and even worse, the 4s, the market will drop even more. So I think that you can selectively buy certain things here, but I don't think that this is the time to deploy large amounts of cash, because look, I mean, the market is forward looking, right? So the market wants to see a potential end, or at least some light at the end of the tunnel to the inflation issue, because at the end of the day, all it cares about is earnings, right? And if inflation is wreaking havoc on the economy, it really puts pressure on companies to be able to not only give good guidance, but also report positive earnings, also grow the value of the present value of their future cash flows, right? The discounted value of their future cash flows is now diminished the higher that yields go, the higher that the Fed funds rate goes. So, there isn't until you feel like the market has interpreted that inflation was a solvable problem, I don't think that really, I don't think that there's justification, or I don't think it warrants heavy buying here. But yes, I do think that there are certain things you can pick your spots in. Like historically, there are certain stocks that are down, 30 or 40%, that are rarely ever down 30 or 40%. And you can start nibbling on those. But, it'll be a while before you see any sort of returns on that. And yeah, I do think that that you can afford to wait. You can afford to wait here, because, and especially, I mean, it could be a brutal summer, right? Because we have obviously the Fed next week. If they say 75 basis points, okay, market drops some more. What if at the end of July, when the GDP numbers come out, what if we get another negative quarter of GDP? Then we are officially in a recession. And I think that, I think at that point, depending on where we are with CPI, that will probably be the point that I would start rebuying heavy, right? Is the fears of, if we do get a recession, those fears, that overreaction, if we do get an overreaction drop in the markets, and the VIX then spikes again above 30 or 40, or 35 or 40, that's when I would start thinking about buying heavy, right? When there's like max fear in the markets. And you can see the VIX up almost 10% today. Not quite above 30, but I think we will get there. I think all next week we're going to see volatility as the market braces for the Fed. So yeah, I mean, do with that information what you will. I mean, I do think we will see the VIX continue to climb, whether you play that with call debit spreads, whether you play that with calls. Yeah, I do think there's an opportunity to hedge here with the VIX potentially. All right. Let's see. I sold last Thursday at highs. What highs? Gagan M donated $50 to St. Jude's. Thank you so much, man. You guys really blow me away with those donations. Thank you guys so much. We are in a recession. I mean, sure, I guess people can argue that, but there are objective metrics that point to that. But yes, I mean, some people argue that we're already in a recession. But I mean, when the market officially deems it a recession is when we'll get 2 back-to-back negative GDP quarters, right? So it doesn't matter if you think we're in a recession or not. It matters what the market thinks, right? So do you own some gold? Yes. What's your take on silver? Not my favorite, because it requires, it is a rather cheap metal. So if you're going to invest in silver, that you're going to require large amounts for you to have any significant investment. And I'm not trying to lug around large amounts of silver. Have you ever heard of AMRS stock? Saw it took a big hit in the last 12 months. Read up about the company. I mean, dude, like, this is not the time to look at highly speculative stocks. Like, it really isn't. And I think that the market has taught people some pretty harsh lessons in the last year. Take notice when all of this horror started. All of this horror started, if you really want to get technical, all of this horror started in 2018, when there was no reason for the Fed to not raise rates at that time. And this was before COVID, right? And not reduce the balance sheet. There was no reason for us to have trillions of dollars on the Fed's balance sheet back then when the economy was doing good before COVID. So that's when all of this really started, to be honest. And this is all just a sort of a snowball set of repercussions that have just gotten out of control, and then obviously you had COVID, and then obviously you had the Fed printing money like crazy, which I guess some can argue was necessary at the time when nobody was working. But yeah, I mean, they should have probably started cutting rates a lot sooner when the GDP was at a record high coming out of COVID in 2021. And they didn't start looking at it or even talking about it until 2022. And they admittedly say it was too late. So there are a lot of reasons for why we are where we are here at this point, but they certainly didn't start last year. This all starts with the central bank being too dovish on monetary policy when the economy was doing really well before COVID. Paper recession or real one? I'm not sure what you mean. Can you look at Apple, EMA, and Microsoft? What do you want me to look at, Dev? What about it? Jay Santiago donated $5. Thank you so much, man. Thank you for your donation. Is it a good time to start DCA into Apple? I mean, it's still, the valuation is not great, and we see a gap down on Apple now. It's down 3.5% today. I wouldn't call it a good time, but certainly better than when folks were buying it in the 180s. But I do think Apple does potentially have more downside, as well as, other mega cap tech stocks, especially as the 10-year starts to climb. And yeah, we get a rise in yields. All right. Let's see. Which is your favorite ETF in gold? If I was going to do a gold ETF, probably GLD. Thoughts on airline stocks? I mean, okay, I guess for the long term, but you're not going to probably see a return for a while, especially with the price of fuel going to wreak havoc on their income statement, right? It's not that their margins are getting killed right now because of the price of fuel. He says, I'm not Trinidad James. I forgot about that song. I don't care. This is technically a recession now. We have imploded and it won't stop. I know you don't care, but the market also doesn't care about your opinion. What I'm saying is the entire market needs to think that we are in a recession for it to react as such, right? Regardless of what you think, sitting in your house or in your room, what matters is what the market thinks, not what you or I think. So that was bad news for the SPY should continue to bleed. I mean, yeah, you're kind of missing the point, dude. You're kind of missing the point. Yeah. I mean, what have we been saying this whole time? A lot of people are saying this is the best time to invest in ETFs. In ETFs, depends on what ETFs. There's thousands of ETFs out there. It depends on what ETFs you're talking about. Is Fed subject to being sued for mismanagement? No, they're out of the reach of government. It's in their charter. You should read a book called, what was that book called? Hold on, I have it. But read a book called The Creature from Jekyll Island. Okay, that book will describe to you the way that the Fed was created, how it came to be, and how it is actually separated from the federal government. Even though the word federal is in its name, right? The Federal Reserve, it's not a branch of government. It's a private central bank. But read that book, The Creature from Jekyll Island. It's a really good book. Either way, that will answer your question, Anas, whether the Fed can actually be sued for mismanagement or not. Do you think that the worst is yet to come? You mean worst? And I don't think that the market is going to drop by another order of magnitude, similar to what we've seen now. I think the market will continue to drop, but is the market going to drop another 30%? I personally don't think so. But yeah, I think it will continue to be volatile and it will continue to drop. Kenan, why did you retract your message, man? Put it back. Or retype what you said. Do you think high growth stocks are too cheap now? Why are you what is the obsession with high growth stocks? What is the obsession with that? Why are you guys dying? Some of you guys dying to get back into shit stocks. Look, the market suffered a .com like crash. Okay. And yes, I'm old enough to remember the .com crash. These stocks, some of these stocks that you guys are talking about, these high growth stocks, will never get back to those prices. It's just a matter of fact. They will never get back to those valuations, right? So just because a stock is down 80% doesn't mean it's a good stock to buy. You know, like practice looking at a stock's balance sheet, practice looking at its valuation. If you don't know how to do that, I mean, get something like Seeking Alpha, which will give you quick and dirty valuation metrics, right? Like it will give you quick and dirty PE non-GAAP. What is the price to book? What is the price to sales compared to the sector median, compared to its peers in the market? Take a look at its growth. Take a look at its profitability. You know, and even here, I mean, in Seeking Alpha, if you go to financials, you can look at companies' balance sheets. You can look at their income statements. You can look at their cash flows. You know, start to look at these as companies and not ticker symbols. You know, it's kind of disheartening to see so many people just point to a ticker symbol, look at a chart, see that the stock is down 70% and say, oh yeah, this is something that I really want to buy into. That's not how you make investing decisions. Is rotating into quality dividend stocks a good idea at this time? Yes. I mean, there are quite a handful of dividend stocks that I would be happy to pick up at this time. And here's the thing with dividend stocks, like that I don't think a lot of people understand. So if you look at a dividend stock, like let's look at Walmart, right? If you look at its current dividend yield, well, it's not great, 1.83%. But the dividend yield is basically what you would get in terms of a percentage, like a guaranteed percentage, if you invested in that company now, right? So regardless of whether the stock price starts tanking or not, you're getting the dividend yield every year for investing in this stock. So you want to look for companies that have high dividends, but are also quality companies in terms of their financials and their growth outlooks. And I think you can, on Seeking Alpha, you can look at dividends. Let's see, hold on. I think top rated dividend stocks. Yeah. You can look at what are the top rated dividend stocks. You can even sort it by yield, right? And start there. So, you know, it's also not a case where just because something has a high dividend yield, you want to invest in it. It has to be a stock that you are bullish on, but also pays a high dividend yield. So if you look at Merck, for instance, right, the pharmaceutical company, this is a beast of a stock, and it currently pays 3%. So yes, if you invested in Merck, you would get 3% on your money every year. Now, this currently isn't enough to beat the crazy inflation that we have, but in general, when inflation is around 2% a year, this is enough to beat inflation. So you have enough quality dividend stocks in your portfolio. You can get nice returns just off of the dividends. Now, I'm not a dividend investor, but I do believe that there is a segment of your portfolio that can be occupied by high quality dividend stocks. All right. Avoid gold and silver plays, not rewarding at all. There is some truth to that for sure. There's definitely some truth to that. The Creature from Jekyll Island. Yes. You were calling out the book when I was thinking about it. Yes, that's it. Z's from the streets. I swear he knows every rap song. No comment. Thoughts on thoughts. It's a good idea to buy Uvixi for early next week. I think you're a bit late, so I wouldn't call it a good idea. I think you should have bought Uvixi before today, expecting or trying to hedge using inflation. But yeah, I mean, looking at the VIX, it looks like there is some room to grow, right? Like we get these bounces in the VIX, and we usually don't stop until we get above 35-ish. So, you know, if you're using it as a hedge and you're not YOLOing your whole portfolio in UVIXI, sure. What other investing or self-development books do you recommend? Melanie, I'll be honest, I don't really read investing books. I mean, there are books by respected economists that I like to read, but not really for the intended effect of developing my trading or developing my investing. I mean, I don't think that there's any substitution really for actually doing it, whether you're doing it via paper trading or whether you're doing it with real money. I think opening up a chart and charting every day, taking down notes, going over trades, what you did wrong, what you did right. Why did this trade work out? Was it just luck, or, was there a confluence of indicators that worked out for you that maybe you can replicate for future trades? That to me is much better than reading books, to be honest. But yeah, I mean, I do like reading books by Peter Lynch or Ray Dalio. I mean, those people are juggernauts in the finance world. But again, it's not really with the intended effect of self-developing. But you can look, oddly enough, like I always talk about this, but you can look outside of investing. Like there are other books or other teachings or other disciplines that allow you to become less emotional when trading, right? Like I talk about poker all the time and the influence that poker has had on trading. But yeah, I mean, anything that really allows you to keep your emotions in check, any books that hit you in that way that allow you to keep your emotions in check. Like I'm not a big self-help guy, but if it helps you, it helps you. So yeah. But in terms of actual investing, trading principles, nothing is going to be a substitute for actually getting in there and doing it. It's like trying to read a book about basketball versus going out and actually shooting hoops, right? Like at some point you can read all you want, but you have to get your body in the rhythm of taking shots. Can't we get back to pre-COVID levels? I mean, yeah, anything's possible. Anything's possible. Thoughts on the blacker the berry, the sweeter the juice. That's a Tupac song. I told you, I know all these songs. AMC to the moon. Sure. Who pays the Fed's salary? That's a very good question. The bank itself pays the salary. Yeah, I don't think they have limits on what they get paid. I could be wrong, but I don't think they have limits on what they get paid. Melanie says, put it back. Oh yeah, I was talking about the message that my friend sent on here. He retracted it for some reason. What do you mean when you say we start off everyday neutral? What I mean is, so if you look on the Discord, and by the way, if you guys want access to this, you'll see a link in the description. I think there still should be a 30% off there, so check it out if you want. But what I mean is exactly this. I mean, we have calls and we have puts based on certain levels that we see on the chart. And if the stock that we're looking at breaches a support level, for instance, which would be on this side, then we end up buying these puts. If it breaches a resistance level, which would be on the call side, then we end up buying these calls. So that's what I mean when I say we start off everyday neutrals, that I don't, especially in this market, and this has been working out so much better than swing trading. I don't really look to, hold things overnight. I'm really just waking up every day, seeing what the market is doing, drawing these levels, and then playing those levels. Now, recently we did have a bunch of swing trades in the form of spreads. Most of these were bear spreads, I believe. So EA, Facebook, Starbucks. But in general, like you can see the other analysts posting in here. But in general, in this market, it's not a very swing friendly market. It is a much more day trading friendly market for sure. Let's see what the markets are doing at right now, actually. So we have NASDAQ down 3.1%. S&P's down 2.5%, and then the Dow Jones is down 2.26%. I think every sector in the S&P is red. Yeah, I think every sector in the S&P is red, which is actually pretty rare, like including energy and healthcare. But yeah. All right. Let me get to your questions. My shawarma is getting too expensive. But what if I truly believe in my heart those shit stocks will bounce back? Surely that means they will. Sure. Sure, if that's what you want to believe. All right. Can you explain the GEX trading style? Not sure what you're referring to. Can you do a video on the handful of dividend stocks we should consider building a position in? When the time is right, sure. Google better be paying you good or I'm going to short them. Google better be paying me good? I'm not sure what you mean. Remember, balance sheet reduction not even started. Put June 15th in your calendar. Yeah. Sure. But even then, I mean, they're starting with a pretty paltry number, right? Like the balance sheet reduction is going to be capped at $30 billion a month for the first 3 months, I believe. The CPI report is all skewed by high gas prices. No, it is not. It's foods, commodities, prices all across the board. The CPI is a measure of what consumers pay at registers. So, you know, I don't know if you've been to a grocery store lately, but everything is up. So it's not just gas prices. No, I mean, gas prices certainly contribute to it. But the CPI encompasses prices of all goods and services that Americans pay for, right? Gold is skyrocketing right now. Let's check. 0.06%. All right. Did inflation numbers go up? What the fuck? What do you think we've been talking about this whole time? Okay, I'm just going to say no. Let's make it fun. No, they didn't go up. Boston or Golden State? I mean, Boston is looking really good. It's looking really good. I had my sights set on Golden State winning, but Boston is looking really good. Jose Roberto Rios, thank you so much for your donation, brother. Thank you, man. This means a lot. Thinking Fast and Slow is also a good book if you can get through it. It's all about mentality. All right, thank you for the recommendation. There you go, Melanie. There's your recommendation. Are you training martial arts still? You know what? I'm not. I haven't sparred as much as I used to. So, yeah, I mean, hitting the heavy bag, or hitting the speed bag or whatever, sure. Like I always keep those skills sharp. But in terms of like sparring with other people, and I especially like sparring with people that are bigger than me, because you really have to be on your A game. I haven't done that in quite a while. But yeah. I learned how to day trade on YouTube. I mean, you can learn anything on YouTube. The money printer pays the Fed's salary. Not really, no. Bank stocks don't rise through interest rate is higher. Why? Well, bank stocks right now, because the rates have to be significantly higher for bank stocks to make money. So especially because the yield curve inverted, right? Because what banks do is they borrow at short-term rates and they lend at long-term rates. So when the yield curve is inverted, and the shorter-term rates are just as much, if not more, than the longer-term rates, that completely inverts the bank's business model, right? They're borrowing at higher rates than they're lending. So really, until that is solved, and you tend to see long-term rates go up more than short-term rates, and short-term rates start to drop, I don't think you'll really see the positive effect on banks until that happens. Thoughts on cash secure puts on PayPal? No. Are you playing any events at the World Series of Poker? Yes, this year I might. I definitely might. I was also looking at the European Poker Tour. I YOLO everything in growth stocks. Good. Adriel Roman donated $20. Thank you so much, Adriel. Thank you so much. That means a lot. Nancy definitely blown today. PSA, the Discord is worth every penny. Yes, join the Discord. There's a lot of value there. 1,000%. And we just added 2 more analysts to the Discord, so it's not just me yapping at you guys all day. AMC is hanging tough. At one point, everyone holding cash will do something with it, right? The money was already created. Hold it forever doesn't make sense. I don't think you quite understand, Ellen, how the central bank, how the Fed is trying to remove liquidity from the markets. No, not everyone holding cash will do something with it. Trillions of dollars are going to make their way back to the central bank out of the economy. That's the whole point of raising rates. That's the whole point of selling assets off of the balance sheet, right? That's the whole point of making houses and cars more expensive. At some point rates will be so high that folks can't spend on things, and they would rather put their money in the bank and gain interest, right? Which is what the Fed is hoping. Inflation is at 4 decades high, though. Yes, high since 1981. Started when you end oil independence and get back to Paris Accords, and then the Iran deal. Okay, yes, the Iran deal has a lot to do with inflation. You're right. Yo, dog, what's a CPI report say? Jesus Christ. Rewind the tape. CPI report says 8.6 year over year. So last month came in at 8.2. So now we are trending higher. This is the highest since 1981. And there's no sign that inflation is going to ease. And there's no sign that what the Fed is doing is actually putting any sort of dent in this, not even the slightest. So there you go. Long story short. One Up on Wall Street, Peter Lynch. Yeah, that's a great book. Love Audible too. Yes. All of Mr. Lynch's books rock. Yes. Let's get a friend poker game going for the SoCal LA folks and then tacos afterwards. All right. If y'all want me to take all your money, go ahead. Start up a game, invite me. I'll come out there. Z, there is value in learning gamma squeeze style? No idea what gamma squeeze style is. A gamma squeeze occurs when there are so many options that are bought on a stock that market makers then have to go out and buy the stock in order to cover the calls that they sold to the public. And that creates an effect called a gamma squeeze. But it happens when there's an unusual, consistent and incessant buying of call options, just like we saw with GameStop and AMC. And then that leads to what's called a gamma squeeze. What the hell is a gamma squeeze style? I have no idea. No idea. Thanks for doing great work. Appreciate you. Amazon is good to buy now. Already talked about Amazon. Wait a bit. Shout out to the new analysts. Yes, Carlos. They're doing the Lord's work for sure. Is this a sign the U.S. dollar will start to crash? No, quite the opposite. Look at the Dixie right now. The Dixie's actually climbing like crazy, right? 104 today. We're gonna hit that probably hit that 105 high that we hit back in May. But the Dixie is near all-time highs. Like we haven't actually. Is this all-time highs for real? No, it's not. Yeah, back in the 80s, the Dixie went up like crazy. But it's because, look, things are bad in the U.S., right? But when you compare this to other countries, the U.S. is actually in better shape, because especially compared to our European counterparts, because Europe has a much heavier dependence on Russia for energy. It has a much heavier dependence on Ukraine for wheat, right? We don't have those issues. So yes, prices are nuts right now for Americans. But when you compare that to other countries, the US dollar is still very strong compared to other countries. And this is one of the reasons why stocks are dropping too, because stocks don't want a dollar that's trending upwards, right? Like, you want a strong dollar, but you want a consistent and stable dollar. One that's trending upwards is usually bad for stocks, right? So, quite the opposite of what you were saying about the US dollar. I know that it seems all doom and gloom right now, but yeah, I mean, compared to other countries, the US is actually not doing that bad. I can't actually name another country that's doing better considering these conditions that we're in, right? So, I was shocked when she said on CNBC that she knows who Cardi B is. What are you guys talking about? Someone said Janet Yellen is the creature from Jekyll Island. Melanie, that's not nice. Z, more power. I got a question. I hold a different currency as well as USD. In this environment, would it be wise to change my other currency? No idea what dog. There's 197 currencies. I don't know what currency you're holding. I hold PHP. Oh, that's Filipino pesos, right? I can't advise you on that, man. I don't know. All I could tell you is that, yeah, right now, if you traveled anywhere and you transferred your dollars for that currency, you're probably getting a lot for your dollars. Like, right now is, if you are looking to travel internationally, and you have US dollars, right now is probably the time to do it. You'll get a lot for your money. You'll pay a lot for those fucking tickets because tickets are crazy now, but yeah. Jason Pareno, $100 buying tournament. Okay. Do it. Organize it and invite me. Gladiators, Z, come to Dubai. Soon. I haven't been there this year. The high rates won't be enough. Not sure what you're referring to. What is the Dixie and what does it analysis tell us? I just told you. It's the US dollar currency index. The higher it is, the stronger the dollar is. But it is in comparison to other currencies, right? Thoughts on cash secure put on Amazon? Yeah, so this is one of the benefits of. Why is my CNBC going? Let me close this. This is one of the benefits of actually of stock splits that rarely people talk about, is that with stock splits, you actually get cheaper options. So these options here on Amazon, these options were so expensive because Amazon was trading at $2,000 and $3,000. Now it's $110, right? So with that said, selling cash secure puts is much easier. Now, I think that you can afford to wait on Amazon until we get near the 105, 100-ish mark. And then it would be a great stock to sell a cash secure put on. For sure. You can go out to, say, like the October expirations, and you could sell, the 100 put on Amazon for about $660 right now. And this will go up if Amazon tanks some more. So if we get to that 105 or 100 mark, you could potentially sell the 100 put for near $1,000, which is crazy. But yes, I do like that play. Are you from Tunisia? No. Great place to visit is Turkey. Yes, I love Turkey. And it is cheap. It is very cheap right now. How expensive is Dubai? Dubai is very expensive. It's very, very expensive. Will the market fall more? Probably. What do you think about shipping stocks right now? Do you feel containers are heading down? I'm not really looking at shipping stocks. Do you think even in this bearish trend, we will be trading consolidation for a couple of years? I do think that the damage that this has done to the economy and the market, I think it will be a while before we do get a full-on bull market again. Lebanese lira is the safest bet. Haram. Man, you can get I think you can get 25,000 liras for every dollar if on the black market in Lebanon. What's Kathy's portfolio looking like today? I mean, she just doubled down on Zoom, was it? And Roku, which is insane. All right. Do small accounts need to get a job now? I mean, I don't know. You tell me. Are you planning to add more modules to the options course? There's so many modules in there. I don't know how many more modules you want me to add. Tell me something specific. FOMC meeting sentiment. Yeah. So if you look at the FOMC countdown tool, you'll see that this is now growing. This was almost near 0. And it is growing now to almost 9% that the Fed will raise by more than 50 basis points. So, I think that the growing consensus, well, actually, I'm actually surprised that it's not higher. I'll be honest. I'm actually surprised that today, in light of the CPI numbers, this hasn't shot up even more. I do think that there is a potential for the Fed to actually raise by 75 basis points. I really do think that's the case, especially with the CPI coming out today. Because, I mean, look, like everything they've done, raising rates since March, they started trailing off the balance sheet this month, which you won't see the effects of yet. Here's the thing. I mean, they could make the case that, we did start rolling assets off or letting assets off the balance sheet run off, but you won't see the effects of that until, next month. So we're not going to do anything drastic, and we're actually going to just raise by 50 basis points. I could see them say that and use that as an excuse. However, I could also see them say, fuck it, we're just going to raise by 75 basis points. And do it a little bit more aggressively. Would we be in this situation if Trump were president? I'm not a fortune teller, but I would venture to say yes, because the Fed would not have acted any differently, in my view. And the president does not control demand. The president does not control the money supply. The president does not control interest rates. So yeah, I think regardless of who the president was, this was going to happen for sure. My boss said he's not going to sell or buy stocks or buy any more stocks. When enough people think like this is called capitulation, right? And that will happen. Enough people will think like this. And then guess what? Stocks will eventually rally back to all-time highs, and then you'll get people buying at the top again. But that eventually will happen, where enough people feel like that, they exit the market, they capitulate, and then, stocks start rallying again, and then the dumb money comes back in near highs when they could have came in at a much cheaper discount, right? Remember that saying that the stock market is the only sale in town where nobody lines up. It's so true. It's so true. People are much more willing to buy stocks near highs than they are at a discount. Guys, if you are on this and you haven't hit the thumbs up button, hit the thumbs up button. It helps other people find the stream, and it goes a long way. All right. Are gambling or tobacco stocks good during a recession? I mean, there's really nothing good during a recession. So, those that are looking for some sort of magic bullet, there aren't really good stocks during a recession. There are stocks that react less. Healthcare is one of them, right? So XLV is the S&P 500 healthcare sector, which is now at a year support, right? So healthcare stocks tend to do okay during recessions, healthcare and pharmaceutical. But it's not like you're going to smart the market and you outsmart the market and buy gambling stocks and tobacco stocks and see yourself get rich during a recession. That's not how it works. No. I I still don't understand how raising interest rates will help lower gas prices. It's not tied directly. Raising interest rates makes the cost of borrowing money more expensive, right? So institutions and individuals will be disincentivized from borrowing money from banks. Also, raising interest rates makes it so that you get some sort of demand destruction with regards to big ticket items like houses and cars, etc. It has nothing to do with gas prices. And I don't think they're raising interest rates to lower gas prices. The reason gas prices are high is because of the complete, well, I have opinions on it, but because there is somewhat of a supply shock due to the fact that there is now an embargo on Russian oil, right? But in my view, I do think that the Middle East can do more, but I think that they are enjoying higher gas prices right now. So I do think that Saudi Arabia and the UAE can actually band together and produce more oil and create more supply in the system. But I don't think they're doing that because they're disincentivized from doing that. Why wouldn't they keep oil at $5 or $6 a gallon, right? They're making record profits right now. Jackie Chong is triggered because I said that this would likely be the same case under his daddy Trump. This is hilarious. Walmart going up during COVID was because the government was handing out money. Everyone just spent it. Yeah, I mean, a lot of retailers saw record profits for sure. How much money do you rick per options trade? No idea what you mean. Honestly, no idea what you mean. Didn't say COVID. I said last verse. What is up with your guys' typing? I think gas prices are also high because we stopped the pipeline to Canada. No, it has more to do with the fact that we're not pressuring our allies in the Middle East to dump supply into the market, right? But yeah. All right. Any other questions you guys want me to go through? Because we're running an hour in. Nope, we cut off our own oil production and ability to move it. This is specifically where all of this started. Yeah, I mean, there are a lot of factors that contribute to it for sure. What does a higher high followed by a lower low mean? Higher high is on the chart when you're making higher highs, and lower lows when you're making lower lows. Not sure what specifically you're referring to. Are you referring to a specific pattern? All right. Why are utility stocks down? Every single sector in the S&P 500 is down. Look. Every single sector. So, yeah. All right. Cool. I think I'm going to end it there unless you guys have last minute questions. But yeah, thank you guys for joining so much. Thank you guys for the donations, as always. I appreciate every single one of you. And for those of you that are in the Discord, I'll see you in a bit. All right. Peace.